Good morning, everybody. We've got a mostly higher trade in the grain markets here early on Thursday morning. It is about 6:35 a.m. Central Time. December corn futures are up 1 at 372 and 3/4. November beans are up 2 at 1013 and a quarter. December Chicago wheat up 3.5 cents at 545 and a half. December Kansas City wheat is up 5.5 cents at 480 and a quarter. December spring wheat up 4 cents at 535 and a half. So the soybean market into some fresh 27-month highs following that very strong close yesterday. Even the corn market is trading its best level since March, so a little bit more quietly into some multi-month highs there. EIA released its weekly ethanol report yesterday. Weekly output of 926,000 barrels per day. That was down 1.6% on the week. It's down about 7.7% versus the same week last year. So ethanol output on a weekly basis is still running below what I would call pre-virus levels by, say, 7 to 12% on a weekly basis. We've really kind of stagnated and just gone sideways here as of late. Ethanol stocks declined by 1%. They are down about 15% versus the same week last year. So ethanol stocks have been back really to pre-virus levels since May for several weeks, actually months now. Gasoline demand was up 1% on the week, but still about 5 or 6% below the same week last year. So grand scheme of things, driving habits among Americans have not returned to normal with this virus deal. Corn demand via the ethanol industry continues to struggle. When you go back and look at the numbers, it's estimated that we lost somewhere around 500 million bushels worth of corn demand during that old crop marketing year. It may even be higher than that, depending on how you crunch the numbers. USDA is estimating corn demand for ethanol at 5.1 billion bushels for the new crop marketing year. That's a number that would probably be 400 million bushels higher, if not for COVID, maybe more than that. And keep in mind, ethanol is the biggest segment of demand for U.S. corn. It typically accounts for about 40% of all our demand, so we've still got some problems there, certainly. China bought more U.S. beans yesterday. These sort of sales have been occurring on an almost daily basis. Yesterday, USDA confirmed another 327,000 metric tons of beans to China for post-harvest delivery. We've got a near record sales pace to China for the marketing year, which began on September 1st. Of course, we were selling a lot of new crop beans before then. Fund traders continue to build length in the row crop markets. Both corn and soybean futures, again, closed at multi-month highs yesterday. Private groups estimating that funds were net long 58,000 contracts at yesterday's close. That would be the biggest net long since August of last year, if realized. It's estimated that funds were net long a whopping 211,000 contracts of soybeans at yesterday's close. So you're only about 30,000 contracts away from the record long of 241,000 contracts that occurred in 2012. We will see an updated CFTC report on Monday. We've got an export sales report this morning. We've got another strong week of corn and soybean sales expected. Corn sales expected to come in well over 1 million. Soybean sales 1.5 up to 2.8. Wheat sales 300 to 700. So we should see some strong row crop sales here this morning. I think the million-dollar question out there right now for a lot of farmers and a lot of grain traders, how high will this soybean market go? I do not know the answer to that question. However, I can take a look at some charts that go back a little bit further. If you pull up a monthly continuation chart on the beans, there are two very obvious areas that stick out to me. One would be the early 2018 high, which was at, I believe, 1071 in spot month futures. That's a level that I think a lot of traders are discussing as a potential upside target. Beyond 1071, there really isn't much till you go up to that 2016 high, which was 1208. That was June of 2016, and I'm talking spot month contracts here. Now, to be honest, in my experience, when we get into these parabolic bull markets, which that's where the soybean market is right now, I don't know necessarily that these chart levels matter as much. I'm not going to say that they don't matter, and I know that some people who follow charts exclusively will say that it's the only thing that matters, but that's been my experience, at least in this sort of environment, which does not happen very often. It's not very often that we see these sort of parabolic rallies with essentially no correction. The cattle market finished higher yesterday in most of the fat cattle contracts. The nearby October was a little bit lower, but marginal gains in the deferred contracts. Feeder feeder cattle market was lower. We will see what develops here today. Ahead of the cash open, the stock market is down. The Dow Jones down about 240 points. The S&P is down 40, so fairly sharp decline there. The bonds are up. U.S. dollar is down or closer to flat. Crude oil's up just a few ticks here, 40.23 last in the October WTI. Gold's down about $15. I'm going to be out the rest of the week. There will be no morning comments tomorrow. I'll be back on Monday. Remember, if you'd like some more information, visit my website. It's www.standardgrain.com. You can go to that website and click on Grain Marketing Plan. Take a look at that subscription service that I offer. It's $49 a month. It includes my morning email, which goes out every morning at 6:30 Central Time. It includes text message updates. You'll be made aware of when, how, and specifically I'm pricing these crops, corn, soybeans, and wheat throughout the year. It's broken down by crop year, by percentage. It's tracked every day. Certainly take a look at that if you're looking for some help. Again, no obligation. You can cancel at any time. You do not need to be a futures or options trader to participate. Everyone have a nice day. Have a nice Friday. Have a nice weekend. I will talk to you on Monday.